Boy, the market was down a ton today. 2% on the Nasdaq. Nvidia down 10% today. Big drops today. So if you remember last night, there was allegations, there was talk that there was explosions in Iran, and the Nasdaq and the S&P plummeted in futures markets. Then by today in the morning, it was up. Incredible. And then as time went on, the markets just kept going lower. Now guys, if you want this channel, this is a new channel for us, Everything Money 24/7. If you like the idea of getting weekly videos 3, 4, 5 times a week where we react to the market very quickly, we're one of the fastest in the YouTube world. We respond very quickly, we get the news out there. Do me a favor, subscribe to the channel. I guarantee that you'll love watching our reaction videos to things that happen. And next week is a super huge week for us because so many great companies, big companies, are going to reporting their earnings, and we will be there to respond and react to every single one of them. In some more news, Nike announced 740 employees to be laid off at their main headquarters in Oregon. Remember, Nike has 84,000 employees, so 740 is less than 1%, but still quite adequate. There's still talk about rates a lot, and how I want to remind everybody, we've said this time and time again, just 4 months ago, the talk around town was 6 or 7 rate cuts for 2024. Now, there's about 11% chance of not having any rate cuts in 2024. Markets are fickle, but remember, it doesn't matter what the markets do in terms of reacting to this and that. You look at what happened last night in Iran. You look at Israel. Guys, how many wars have we had? How many terrorist attacks have we had? How many things like this has had? And it is scary. It's absolutely scary when you're in the middle of it. But as you take a longer term approach of it, there are blips on the radar. What truly, truly matters, and what Mo and I are truly trying to teach everybody, is that when you buy a good company at a good price, if the stock price goes lower, it makes it a more attractive price. Don't confuse price with value. As value investors, our goal is to sit there and say, price and value are totally different things. Just because a price falls a lot doesn't mean the value is there. Look at Nike. Nike's fallen 50% from its high, and I just started buying it. At 30 or 40% lower, people would have argued, oh, this is a great price for Nike. I said, man, not enough for me. I know it sounds crazy, but that's the key. Look at Nvidia. Nvidia's down 10%. I still think it's overpriced by a lot. And I'm going to wait and wait and wait before I buy Nvidia. That's the key here. When you buy a stock, you're buying a piece of a business. You're buying a future set of cash flows. And that cash flow is how you have to decide how much to pay for the company, right? Because once you make that stock purchase, that's the only thing you can control, is what you pay for a company. And obviously when you sell it. But all along the way, that company is going to generate cash flows all along the way, and your return will be based on those cash flows in the future, but most importantly, that price you've paid. And all along, you're going to see ups and downs. If you own Nike and you bought it at 180, you're probably like, what the heck happened here? That price is what you paid for it. Now, what you need to decide is it a reasonable price at $94? Are there other opportunities out there that are better? That's the thing I want to teach people, because when you buy a company, it's extremely rare that you buy the company and it only goes up from there. Extremely difficult. So you've got to differentiate between where the price is going and where the company is going. Jeff Bezos always said, back in 2000, before splits, Amazon was $113 a share. It hit a low of $6 per share. And Bezos sat there and said, wait a second, I'm looking at our stock price, it's down 95%, but our fundamentals are better. Everything's better. Look at Tesla right now. Tesla had an all-time high of $414 per share. It fell below 150. It is now below 150, hit below 100s just back in the bottom of the Nasdaq bear market back in 2022. I think in January of 2023, about 15 months ago, it hit out $103 or $102 per share. But guess what? The fundamentals of the company today are much better than they were when the stock was $414 per share. So I have one question for you. If you're the kind of person who bought at $414 and you're not buying more today, I have one question. Are you truly an investor? Spoiler alert, you're not. But that's what I'm trying to teach here. I'm trying to teach you how to be an investor. I'm trying to teach you how to embrace the bad, embrace bear markets, because you're buying companies for the right reasons. You're buying stocks because you're buying a piece of a business. And as the fundamentals get better and the price goes lower, you're going to buy more and more. Now keep in mind, There's always a reason to sell. As that stock is going down, news follows the stock price. And there's a lot of news in the last few weeks that have not been good. But before then, it was all great news. So what's right and what's wrong? Guys, think about it. Out there right now, how many good pieces of information are out there? How many bad pieces of information are out there about the economy? There are so many data points. But just because there's a data point doesn't mean it's relevant data. I also want you to remember that. I want to help guide you that when things are tough and the emotion's tough, that you make fundamentally grounded, good decisions and make your decisions based on the right information, not just any information. I remember 22 or 23 years ago, Oracle stock was at $6 or $7 a share. I mean, it was the low of the bear market back then. And a friend of mine's dad thought he was a stock investor. And I said to him, man, Oracle looks pretty interesting. He said, nah, they have terrible sales, a terrible sales force. And I was like, oh, and I believed him. I didn't buy. And I'm not blaming him for that, but I'm sitting there saying, like, I believe this very successful business person was smart about that. $6 or $7 a share. What's the stock at today? I would have crushed it had I bought it back then. Crushed it. It's over, I think it's over 100. I don't remember what the stock is at right now, but what does that mean about it had bad sales? I look back at it now and go, that was just stupid. They had a great sales team. It was just that the stock was down a lot and therefore they had to be blamed on something. Now, did they have questionable sales tactics? Yes, but he didn't know that. It wasn't until years later that came out. Remember, it's easy to blame a stock going down on negative news, and it's easy to give credit to good news when a stock is going up. Tesla changed the world of vehicles. And when the stock was going up, it's changing the world. It has all this. Guess what? There'll be a time when we don't talk about Tesla being a tech company. There'll be a time when the software component of Tesla is not discussed. Remember, they just recently cut their price in half for the tech component of their business that doesn't even generate, I don't even know what it generates in terms of percentage of the business, because it's 85% or more of the business is generated from auto. It is a car company. If there's a future professional athlete, we don't go to college basketball and football players and call them pro athletes. They're not there yet. Could they become them? Absolutely. But we don't pay them as such. Well, forget about NIL, but we don't pay them. They don't make the $20 million contracts they're supposed to. And they're not called pro athletes for a reason, because they still play in college. And that's the same thing I say about companies. It's the same thing I say about Tesla. It is still a car company, tried and true. 85+% of its revenue comes from car sales. So if you're sick of making the decisions based on emotion and getting manipulated based on emotion and want to make better fundamental decisions that are more in charge of your emotions, click the link below, join our community. The thousands of community members in there think the way that I do, but they also don't agree with me on everything. That's what I love about it. We have conversations and we can help each other during the tough times of emotion. Click that link, $7 for 7 days. It's a no-brainer decision. It will absolutely help you make better decisions, because your job is to take the fundamentals of business, make a good decision from there, and as the emotional ups and downs in the markets occur, be able to stay in there, because guys, you're gonna make the most money by watching things compound. That's what's gonna make you the most money. If you were smart enough to buy Amazon at $6 a share back in 2002 or whenever it was, there's still gonna be ups and downs that were very difficult to handle. Still plenty of 50% falls in the company. And guess what? Look at the most recent one. It was at $80-some a share just 15, 16 months ago or something like that. Now it's at 190 or whatever it's at. Guys, it's tough to invest, but if you buy for the right reasons, fundamental reasons, and you let it ride, your money will compound successfully for a very long time. And that's what's most important. And that's something that I learned just in the last few years from our community. So again, sign up for that link below to join the community. Now, are we in the start of a bear market? I don't know. I don't know where stocks are going to go. Anybody who says otherwise, literally, I believe this. If somebody tells you this is what's going to happen in the next 3 or 6 months or a year, you've got to avoid them. We have no idea what's going to happen. Zero clue. Your job is to buy good businesses at good prices and hold on to them. My philosophy has changed on investing in the last few years, but it actually drives me nuts when people try to predict where interest rates are going to go or anything like that. I've always said it. Back in 2022, they started raising rates. In September of 2022, I had a meeting with a very big YouTube channel, and the guy said that rates would start going down in the first quarter of 2023. And he said it so arrogantly. And everyone just being like, how do you know? And rates have gone up since then, since he said that. Guys, we don't have a clue. And guess what? I'm going to miss out on things too, but I'm not going to predict when something is going to happen. That's absolutely a fool's ride. That's so stupid to do that. I want you to become a great investor by understanding when you buy a stock, you're buying a piece of a business. And right now, you should be encouraging the stock market to go down. It's very exciting. I love the fact that stocks are going down. The Nasdaq is below its 2022 high. That's what I love. Okay, we're sitting here and I look at it going, I want to be able to buy QQQ. Because guess what? Buying an ETF in the Nasdaq, I think, is a brilliant idea. But I will say that I just don't like these valuations. I'd rather go invest in SPY or something like that. QQQ, I think, should absolutely be a component of everybody's investing because it allows you to get exposure to high ROIC, fast-growing businesses without having to guess which one's the right one. It's a great way. If you look at buying QQQ at the right times, it absolutely outperforms the market. It absolutely outperforms the S&P if you buy it at the right times, when prices are more. And once that's happened, then I think you should keep buying as time goes on. Now, if you're the kind of person who doesn't want to guess, start buying QQQ. But I want to warn you, you will have some tough times ahead. Where we are in terms of stock market valuation is very, very high. We're sitting here on almost all-time highs, 90+% overvaluation in the S&P, and way more than that probably in the Nasdaq. It's a very, very overvalued market. But if you have a long time horizon, you're still going to do well. Warren Buffett tells a story about how he bought his first stock when he was 13 or 14, spent $400. And if you just put that $400 in the S&P back then, in 1941 or 42, whatever year it was, you'd have $400,000 today. That's an incredible amount of money. Let time be on your side. Morgan Housel talks about it in The Psychology of Money. It's absolutely brilliant. If you start early enough, time is on your side. You can weather anything. Don't try to time what's going to happen. I have 1,000 apartments. I have 7 or 8 businesses upstairs in our office. I can afford to sit on cash and make 5.5% on my cash. Most people cannot. And that's why I encourage you not to do that. Just sit there and let time be your advocate. And I want you to get excited when stocks go down in price. And that's going to be more exciting because stocks will probably still go up in value as the price goes down. It's so exciting to do that. And then final, crypto. Guys, I just don't understand crypto and how has any intrinsic value. I recently saw on Twitter people saying, intrinsic value is BS. It doesn't make any sense. It doesn't even exist. Okay, maybe. It may be hundreds and hundreds of years of investing just go out the window now. Could be. I can't say for sure or not. Did I think crypto was going to hit $70,000? Did I think Bitcoin was going to hit $70,000 again? No, I didn't, but it did. Okay. Maybe this world is different. Maybe the currency that everybody says is BS, the fiat currency that all crypto gets priced in, is suddenly BS. If that's the case, what's crypto going to be priced in then? Itself? Okay, this Bitcoin's worth this much Ethereum. That's not the way it works. It's every single crypto is based on the fiat currency that they want to replace. I don't get it. I don't get how the government's all of a sudden say, yeah, we're good with that. I just believe, and I've said this in dozens of videos, I don't believe crypto in its current form is going to work. Now, remember, crypto 5-10 years ago was exciting because it goes under the radar, you don't pay tax on it, etc. Well, now you pay taxes on it. And it's just a matter of time before the government says, wait, you want to have this completely under the radar so you can do illegal activities? You're out. That's banned. I don't want the government to be my competitor in that regard. All it takes is the US government saying crypto's banned. And guess what? If they ever thought it was really a competitor to its own fiat currency, why would they keep it? So guys, if you like this video and you want to see the investments I do believe in, look at my next video, which is 13 stocks that I love. And also don't forget, please subscribe to the channel if you want weekly updates on stock news. I appreciate it.